Good morning, Bill.
Today is a bright and cheery day. It's a little hot in parts of the country, wet in others, and we're discussing things that are hot and wet, which is vendor management.
Is that hot and wet?
It's hot and wet. No, it's a hot topic. It's a hot topic, and most people don't have it right. They're all wet when it comes to putting appropriate controls in place, and it's amazing how this whole area has mushroomed over the last several years. Banks used to do a lot of this stuff internally.
They did, and then everything was focused on outsourcing. And, and legitimately a lot of banks' management said, our business is really not in managing these different details of the operation. We're here to make loans and invest this money. And so that's where we should put our focus and let someone else do this other stuff. And then it's sort of gone, one way and then back the other. But back in October of last year, the OCC came out with new guidance, October 30th, and said, from now on, thou shalt pay attention to their vendors.
But before we get there, it's very difficult for a bank to keep up. Or from a technical perspective,
and all the new regulations.
So they've got to focus on lending money. And it's, when I say it's hard to keep up, it's very difficult for them to keep. If they build it themselves, if they insource it, it's a very difficult thing. Software tends to have a scale aspect to it. So you build it one time and you spread it across many clients.
Right.
Unless you're just a gigantic bank and you're building this for some unique uses inside your bank, it's very difficult to recoup that development cost.
Not only that, with the way technology is changing, the half-life of any development you do is pretty short.
It is.
And so you may get it in there and it may just be fine, except that it's out of date.
It is out of date, and we've experienced that in our
all the time.
FNC.
It's tough to keep up.
And for example, one of the things that, and we'll talk about vendor management in 1 second, this is a first or really second part in a mini part discussion. One of the things that's happened is there are many browsers that are out there.
Right.
And so the question is, which browser do you support? Now, several of you listening to this will say, well, our bank standard is like Internet Explorer 7. Well, they don't support 7 anymore. All right.
And it's
and so it's a risk.
And a lot of the banks are very, very slow to update their operating systems.
Well, that's creating vulnerabilities.
It's
creating vulnerabilities because Microsoft will introduce patches, as an example, and there are new browsers that are out there: Safari, Chrome. There are all these different browsers, and so the question is, does your vendor support all of these browsers, and which browsers do they support? They've got to support a current version, so the security patches are there. And a vendor management plan has got to take all that into account.
Yeah, it's got to be pretty comprehensive, although I think it was 60 Minutes last week ago, they had an interesting article on all of the ICBM management systems.
Mm-hmm.
And they were talking about the fact that the computers are so old in those that all of the current threads, security threads, wouldn't even work on them. So maybe if you're slow enough.
so if you're old enough and slow enough, you don't have to worry about the new threats.
Exactly, yeah.
So that old and slow is good for us, Bob.
Well, it's certainly familiar. Every time I look in the mirror.
So let's talk about where is a bank to start? And by the way, we tend to think about this in terms of mortgage and home equity.
But
this applies to their attorneys they outsource things to. It applies to really all of their vendors.
In the definition, it says that it applies to anything that's a critical activity. And then they define a critical activity as that poses a significant risk if the third party fails to perform.
Okay, so that's
pretty broad.
What do the examiners want it to be?
Significant customer impact, significant investment of resources to implement and manage the third party, or last, it would have a major impact on bank operations if they had to change vendors or bring it back in-house. So that's pretty broad.
That's just about everything. And so And they've got to do all sorts of things. They've got to do background checks on the senior
I've got a
executives.
list.
I know, we're going to talk about the list in a minute. Now, we're going to talk about the list. You know, and it's changing. It really is changing. So one of the things that's changing, it used to be, and banks struggle with this, what do you do if you have clients and vendors that are engaged in activities that were heretofore illegal and now are legal? For example, it's been a big issue of banking marijuana vendors in Colorado.
Right.
It's been a big regulatory issue, and the Treasury Department said, okay, you're good, you can do that, all right? Yeah, they came out, which the OCC is a part of Treasury, and you can do that.
Yeah.
That's been a big deal.
But the banks have been still very reluctant to do that.
Well, they don't. The reason they've been reluctant is, you know, it's sort of like when you put your hand up on the stove when you're a kid, or on the range and you get burned. You don't want to do that again.
Exactly.
You remember what that feels like, and so they've been reluctant. It's pervasive when they start doing risk management. Well, folks, our recommendation, the first thing you need to do is make a list of all the vendors you think you have in the bank. My guess is, you would think there's a list, a complete list, but my guess is there's not a complete list of all the vendors in the bank. This department's got one, and that department's got one, and this department's got one, and they're probably totally different.
That's the first thing you should do. The second thing you should do is assume that it's only half complete.
Well, let's talk about that, and let's focus on you've got a list.
I've got a list.
You got your own list?
I've got,
What's OCC's list? I know.
It's OCC's.
Let's talk about the OCC's list.
They basically have a summary of the things that they want you to focus on, and then for each of the items, they go into a lot of depth. All right.
The first thing it's got to be, the OCC has got to start with a plan.
Exactly.
They're all about a plan. Okay, so let's get around the coffee table or the conference table, and let's talk about what our plan is.
You've got to have a strategy for how you're going to deal with the third-party vendors. You've got to identify the risk. You're going to figure out how you're going to select them. You're going to then put in a plan for assessing their performance and providing oversight as you go forward.
And so they need to start, before you get to the planning session, our recommendation is make a list of all the vendors in the bank.
Exactly.
And then go to the conference table and talk about the different risks that you think you face by line of business. So this encompasses the bank's strategy. The vendors the bank is going to use are going to be driven by their strategy. For example, if they're not in mortgage lending, all of the third-party settlement service vendors will, in terms of mortgage, will not be relevant.
Right.
And so it's going to depend on the bank's strategy, where they're focused and that sort of thing. Any more guidance you can give us today? We're sort of setting up this discussion.
Yeah, I mean, basically they say that you're going to have to come up with a proper due diligence process for selecting your third-party vendors. You're going to have to go over the written contracts outlining in detail the responsibilities of both parties. So you're going to have those written contracts. You're going to have an ongoing monitoring program. You're going to clear the definition of the roles and responsibilities internally for your oversight and management of the third. So you can't just say, well, that's his responsibility in addition to everything else. There are going to be specific people who are charged with the roles and responsibilities for that oversight and management.
And let me jump in here. For those of you listening out there, we've got two kinds of vendors. We've got vendors that do ongoing, some of our clients call these integrated vendors. They do ongoing work for the bank. They're a known entity or known individual, and we have lots of information on them. And then there are these ad hoc vendors,
right,
also known as non-integrated vendors. I can't find any distinction
you've got to do
vendor management
right,
as to the due diligence you have to do and monitoring on integrated and non-integrated.
Right. Now, they may be part of your plan to handle those slightly differently in terms of assessing the risk and everything.
Lots of the risks are still there.
The last two are that you have to have everything I just said well documented. And the last thing they said is that you have to have an independent review of everything you've done.
Now, is this like my, well documented, is that like my high school senior English paper? It had to be well written.
I don't know about that,
but it was
certainly
purely the judge of my high school English teacher, okay?
that may be it, or it could be they're talking about the kind of comments in your yearbook where they describe the bad things you did.
I didn't have those in mind.
Oh.
All right, well, folks, this is F&C's Morning View. We're out of time. We hope you have a fantastic week. More on vendor management and third-party oversight as we drill down into what we think will be the 2015 topic of discussion among our clients. You all have a fantastic day. Goodbye, Bob.